Hello, my name is Brehon Mills, and I'd like to welcome you back to the channel where not only do we talk about great stocks, but we also talk about great books. Listen, family, whenever I talk to you about the market, whenever I talk to you about stocks, whenever I talk to you about industries, listen, you can find me in the right-hand corner, but majority of the screen, I want on charts, I want on data, I want it on information, because that's what's most important. I want you to be focused on looking at these charts, all right? Looking at the data and looking at that information. Because if you continuously look at these things, it will begin to submit itself in your subconscious mind, and you'll be able to recall this information at later times. All right, now let's take a look at the Dow Jones Index. Now, CNBC is panicking, people are panicking, everyone's panicking about the stock market. Are we headed for a crash? My stocks are down 10, 20, 30%. When will the bleeding stop? I'm tired of losing money. When will it stop? And those are the continuous questions people are asking others and all of these social media platforms. And listen, we know what time it is because we understand the movement of stocks. We understand the movement of the economy and the movement of the market. All right. Now, again, stocks do move on the news, but 85-90% of the time, the market moves based on technicals. And remember, 65-75% of all trading is done by computers, and they are picking up and reading certain algorithms. All right. So listen, stocks, markets, never move too far away from the 20-day moving average. And if you follow my channel, you know I talk about this day in and day out. And I'm going to talk about this so much that when you begin talking about a stock, when you begin talking about something you believe in, something you want to buy, something you want to invest in, you are going to pull up that 20-day moving average, because that is the king of all indicators. That is the king of all movement of action. Okay. Now let's take a look at the Dow Jones Index. All right. Because again, when CNBC and all these people are reporting that the market is down, the industry is down, they are gauging this by the Dow Jones Index, all right, which is comprised of the top 30 largest companies doing business. Now, let's take a look at the Dow Jones. As we can see, in 2020, dating back to April, we have been on a strong bullish run. Very, very strong bullish run. We've had a few setbacks here and there, but for the most part, we've been on a strong run. So you could just invest your money in the VTI index fund, total stock market ETF fund, and you will be sitting pretty right now, because the market is designed to make you money. All right. But again, we want to identify opportunities where we can get in, get out, and make, some gains along the way, protect or minimize or reduce or eliminate the potential for loss and maximize our gains. We're always looking for those opportunities. All right. Now, this is a broad picture. Now let's zoom in. And let's take a look at these candles. Now, if you know anything about candlesticks, a lot of these candles will tell you a lot about the sentiment of the market. And what I also like to use is the MACD. All right. Now, the MACD measures the momentum coming in and leaving the market. All right. Self-explanatory. So if we go back to looking at this strong uptrend, we can see that the price oscillator crossover going up, strong uptrend, and the strong movement is followed by this strong uptrend. All right, now we have a crossover going down, and then remember, when stocks or when the momentum leaves the stock, it doesn't mean that it's going to drop. Most times it could trade sideways. All right. So it doesn't always going to be a reversal in pattern. Sometimes we're going to have a lot of sideways movement. All right. And so that's what you see here. But let's take a look at the candle at the top of this uptrend. All right. Now, what we see here is a strong uptrend, strong upward movement. But then we have this candle here at the top of an uptrend. And this is what you call a shooting star candle. Now, a shooting star candle at the top of an uptrend could be a strong signal for a reversal in pattern. All right. But there is one thing that needs to happen. The following candle needs to be trading below or closes below that shooting star candle. And that is exactly what we had. The following candle was trading below and closed below this shooting star candle. So that is a strong indication that there is a reversal in pattern. All right. Now, if you would have got out here, it would have been great. You would have avoided a lot of these losses. You would avoid this reversal coming back to the 20. And also, without even understanding or knowing how the candles operate, we could just go by the 20-day moving average. And we also know that nothing ever moves too far away from the 20-day moving average. Once we move up away from the 20-day moving average, we snap back to the 20-day moving average. So lately, all right, we have moved away from the 20-day moving average. So what would you expect to happen? You don't need momentum. You don't need your RSI up. You don't need any of that up. You don't need the 100-day moving average. You don't need any of those other indicators. What is the 20-day moving average telling you? The 20-day moving average is telling you that we will snap back to that 20-day moving average eventually. And these are the things that we need to understand and we need to accept in our mind when it comes to investing. Because when you've been doing this for a long time, you understand that. And so this is important for the new and the young investors. Listen, pay attention to the 20-day moving average. When you are thinking about investing in a specific stock, pull that stock up, go to Yahoo Finance and go to indicators, and you want to pull up the 20-day moving average, because the 20-day moving average will give you an indication of where this company is moving, or where this stock is moving, or where this market is moving. All right. We're going to have uptrends, but also we're going to have occasional pullbacks to the 20-day moving average. All right. Now, the Dow Jones Index, we take a look after the shooting star, after the confirmation that we had a day where we were trading below and we closed below. What do we have? What do we have? What do we have? Downward movement. So we may have more downward movement. What happened? Momentum on the MACD. The momentum is moving out. Strong momentum to the downside. We had the crossover on the oscillator, which is an indication that we may have more downward movement. Again, the oscillator isn't a guarantee that we are going to have more downward movement, but we could also have more sideways movement. But other than that, the stock price isn't going up. All right. So the stock is or the overall market here is what we're looking at, the Dow Jones Index. We should have more down days ahead. We should have a few more red days ahead. We should be getting back to that 20-day moving average. Now, we could have some great news that come out, and that could just change everything. All right. Remember, the market moves with the news, and the market moves with technicals. Now, I hope this video added a little bit of value to you. Now, if it did, hey, please leave a like, hit the subscribe button, and keep coming back for more wealth building information. Peace.